Okay, good evening, everyone. Um, I trust you can all hear me. Let me. I'm live now. YouTube. Okay. Okay. Let me just do this. Calm down. So I want to wait for other persons to join me. So, uh, the comment section is open in case you. I want to confirm if you can see me and what you are seeing on my screen too, so that uh, I want to know if we are on the same page. Uh, Let me know if you can hear me also. I want to know if you can hear me. Okay. Um, I actually started late and I'm so sorry. I was having some technical issues which has been resolved. And right about now, we will be going straight away to the session for this evening. For those that do not know me, a lot of persons are just coming to meet me or getting to know me for the first time. So I am Sarah Bamba, as you can see on the screen, if it's visible enough. I'm actually Sarah Bamba, and I am the lead Switch Digitals. Switch Digitals is actually a a platform that you learn technical digital skills from. First of all, we are on forex trading, then we move to other digital skills training. So that is our purpose. So I've been in the digital space for 5 years. That's from 2020 till now. I've been in the digital space, and it has been worthwhile because I've been able to achieve a lot of stuff from being in the digital space. Okay, I am able to enjoy freedom of time, freedom of freedom of time, freedom of let's say freedom of cash. Not really. Let's say first of all, freedom of time, be at home and do whatever you want to do from being at home, making the money that you want to make and all of those stuff. So that is one benefit of being in the digital space. Also, another benefit of being in the digital space is the ability to earn in hard currencies. Imagine people are complaining about the inflation of the dollars, dollar this, dollar that, and all of those too. But the dollar is actually benefiting those that are earning in hard currencies. Why? Because the dollar is to our favor. Okay, so when you are complaining that everything is becoming, uh, let's say everything is becoming um, expensive, we the dollar we are making more money from the dollar. So being in the digital space affords you to earn in that currency. Also, being in the digital space will actually help you to relate with those persons that are outside of the country. You have connections, you have international connections, sort of, because you are in the digital space where there are no limits. Okay, so that is just a quick one. Now, I want to go to our training proper. Today, we are on forex trading, and our topic for today is trading with intent. Trading with intent. You know that a lot of persons, when they come into the forex space, they just do, how do I put it? First of all, they think that forex is a get rich quick scheme. So, and it's to me, it's not really their fault because of what they have come to believe. You know that a lot of influencers, kind of, that is forex influencers, will be like how would I put it now? A lot of forex influencers, we they actually do this lifestyle marketing. This is what forex trading has made. They are posting their Lamborghini, they are posting their what have you, all for lifetime marketing that forex is affording, which forex actually afford. However, if you do not get yourself together, you fall for the trick. I call it a trick because forex actually affords you that lifestyle. But coming into a forex space because of that lifestyle, we actually hurt you, kind of, we hurt you. So you don't want to be among those that come into the forex space because you don't want to be among those that come into this forest space just because you are seeing those fancy lifestyles that influencers are portraying over the net. So you don't want to be among that. Okay, so you want to come into forest trading because you want to build a lifelong dream. Not you see posts like in this I made this amount, let's say $10 million in a space of 1 week. It's actually possible. So because these persons that are posting this result, they are persons that have stayed in the forest space for years. They have gathered experience, they have gathered patience, they have gathered time, and that their experience is showing off and is paying them off. Not for somebody that just coming in. Okay, so I want to quickly. Actually started very late, and I apologize for that. I've said that in the beginning that I was having some technical issues. That's why I started late. So I want to go into the topic, which is trading with intent. Trading with intent. What is the meaning of trading with intent? What does it mean to trade with intent? Now, trading with intent involves you as a trader approaching the market with predetermined goals. Trading with intent involves you as a trader approaching the market with predetermined goals. You don't just jump into like Nigerians have a way of following the crowd. Like you just see everybody coming in and you just say, "Oh, now yeah, they bring money. Okay, okay. Sorry, I can mix speech in it. I know my audience is Nigeria, so that's why I'm free." So, Nigerians, we are a couple of people that just follows what is going on in the society. So, for instance, I've had examples. Okay, when MMM was winning, you just see people say, "Hey, I don't cash out, I don't cash out to see how much I cash out," and people started joining in because of that. People started joining in because of that. So you don't want to just follow the crowd when you are trading. It is very, very wrong. So trading with intent is approaching the financial market, whether you are trading crypto, whether you are trading forex, whether you are trading stock, bonds. It's just approaching the financial market with like a you are approaching it deliberately, you are approaching it strategically rather than trading impulsively. You are strategic in your entries in anything that you are going to do. You are deliberate. Some persons they just open their chat. I'll go to the chat soon. Some persons just open their chat and look, okay, they'll just say, oh, this euro USD, it's as if it wants to go up, and they'll just place a buy order without, they are not deliberate in their approach. They are not deliberate in their approach. So you have to have a clear objective. You have to have a clear objective. Why am I trading? What am I trading? What do I hope to achieve with this trade that I'm about to take in? You have your clear objective. You have to do a thorough research. Now, this thorough research, to some extent, I have knowledge about crypto and forex trading. Now, this thorough research has to do with crypto trading per se. Because I'll give an example of one I've experienced in crypto trading. I know there was one coin called SafeMoon that I think this was around 221 or thereabouts. There was a coin that actually boomed. The truth is that the coin gave people millions of dollars. Like the coin made people a lot of money. But then people just entered without having a research. Like they just feel like, okay, this coin is pumping. No, I'm using cryptocurrency terms right now. This coin is pumping. No, let me just up in. Let me just buy and hold it for, if I, as the coin is pumping like that, like this now. If I hold it for like 10 years, I'll be able to cash out big time. There was no research. When you want to trade cryptocurrency, you have to do involve in research. There was no research, so they just bought the coin. Now this is, that was like 4 years ago, and today we are not hearing about SafeMoon. SafeMoon did not even get to the next month. You understand? So before you trade anything, you must do thorough research, and also you must have discipline risk management to make informed decision. So a lot of, I'll be explaining all these things later on, but this is just, I'm just giving a general overview. So you have to have a discipline risk management strategy. Some traders just they are just trading like fleas, kind of. So maybe they have $1,000 to trade, and they do not calculate how much they are willing to lose as regards that particular trade. They don't calculate stop losses, they don't calculate their take profit, they don't even calculate. Sometimes I take trade based on volatility. That sometimes I'll measure, like I'll use my pips count to measure the volatility of that particular trade, that particular pair that I want to trade. If the volatility is too high at that particular moment, I do not trade. You understand? I do not trade. So you want to have a disciplined risk management strategy in order for you to trade with, in order to you to trade intentionally. Okay, so this is just a general overview of what trading with intent is. I'm going to be shipping other in as we go further. Okay, so that is for that. So I'll be sharing my screen now. I want to go to trading view because let me add. Okay, so we are here. In markets. I believe you can see my screen. Um, Let me see chat. Okay, let me screen layout. Okay, so indices. If you can see my screen, please let me know. Let me know what's okay. Let me know. You can use the chat box. I'm seeing okay, 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 okay. All right. So just give me a minute. Let me just expand this thing. Okay, okay. So can you just type what you are seeing on my screen? Sorry, I love doing that so that I'll know that we are on the same page. Can you just type what you are saying? Okay. I'm just trying to come in here. So we are going to be doing some analysis. Forest training is part of analysis. We're going to be doing some analysis so that we will, I don't know why this. Okay. All right. So, so I think we should jot this down. So based on trading with it, I'm starting with our analysis part. That is your trading strategy. First of all, you want to choose the trading strategy that you will be using. You must is necessary that you choose the trading strategy that you will be using. Now there are a lot of strategies in the market, and I know I'm knowledgeable in most of them, but I use just one. I'm knowledgeable in most of them, but I use just one. So City, there is the market makers method, there is SMC, there's price action, there are indicators, and I've heard of BTMM and all of those stuff. There are a lot of them in the forex trading and crypto trading. But what I trade with only candlestick patterns. That is price action. I only trade with price action. Why? Because if you do not intentionally if you do not intentionally pick a strategy that you want to be trading with, you will get confused. That is the truth. You just get confused. You will not know. Sometimes the truth is that every strategy is right depending on the timing of the market. That's what some people don't know. That's why me, I don't argue about strategies. I do not argue about strategies. I argue about my own is that even though you want to be trading with indicators, if the indicators is giving you profit, stick with it. Don't learn. You can learn something else, but it may be to your own disadvantage. So I do not have problem. Like I said, I do not have problem with any strategy. My own concern is that strategy profitable for you? Is it profitable for you? So okay, I think let me come back. I don't know if since it's not market everywhere. Okay, this I'm trying to, sorry. Sorry, I have to I can see that this thing is not showing on my. Okay, share screen. All right. Let me come here. All right. I think you can see my screen well now. Let me. Okay. My screen is blank. Is my screen still visible? I want to start doing some analysis. Okay. It's visible on my end. I don't know why it's blank. Okay. I think my screen is visible now. I wanted to just. My screen is visible, but just that it is not moving. Wow. So I was saying that every strategy is right depending on what you know about that particular strategy. So you don't need to be jumping from one strategy to another, seeking for what works. Every strategy works. Every strategy works. What you should do is to master that particular strategy so that you will be able to achieve profitability. That is just the thing that a lot of traders are missing it. You will see somebody will buy a course from somewhere and maybe they have not really mastered that strategy that a course that particular instructor taught. They see another instructor that is showing them profit and all of those stuff. They just quickly jump. You see, they'll just feel like this strategy is not profitable, whereas they have not given their time to master that particular strategy that is being taught. So, like I said, that I trade with price action, just price action. I trade with price action only. I do not trade with another thing. Okay, so with price action that I trade with, I want to start with everybody knows support and resistance. I think so. Everybody knows support and resistance. Everybody knows market trend. I'm not going to be doing all of those stuff. Market trend, uptrend, downtrend, and what have you. Everybody knows that. Me, I'm going to be starting with the strategy. I say that you have to, in order for you to trade intentionally, you have to master a strategy that you will be trading with. So I want to teach um candlestick patterns. That's what I'm teaching, and I'll just teach a few of them because honestly I will not be able to cover everything. So I'm going to be teaching just I just I will be teaching just like two or three if we can. I'll be teaching two or three candlestick patterns. I'm sorry, chart patterns. I'm not teaching candlestick patterns. So first of all, I want to start. I want to imply that everybody knows the double top and double bottom. Like I'm implying that because it's kind of common knowledge. So I want to start with this pattern that is popular to me. At least my those in my team, they know about those that. So I have this down, up, down again, and down. Okay, so this is one pattern that we'll be learning today, and this is the other side, that is the inverse side of the pattern. So I will have this, I'll have this, I'll have this, and down. Okay, so this is the second part of it. So this pattern that I just drew is called the head and shoulders pattern. It's called an head and shoulder pattern. It's a pattern where we maybe the market was going on a downtrend. First of all, let me still use my brush. The market was going on a downtrend and suddenly start giving, market was on a downtrend and suddenly comes down a little bit, or it can be wide, then it comes down again, but it couldn't go lower than this previous low. You know, when the market is on a downtrend, it gives a series of lower lows and lower highs. So after giving this low, it couldn't go down again to break this low, kind of. So instead of it to come down to break this low, it just formed a shoulder and it starts going up. So this here is the first shoulder, this here is the head, while this here is the last shoulder. So it's called an head and shoulder pattern. Now, what does this pattern means? This pattern means that when you see it like this, the market is going to buy. You place a buy order. For know that forex trading is about placing buy and sell orders. Buy and sell orders. So when you see a pattern like this, you place a buy order. Now, this is called an inverse head and shoulders pattern, whereas this is called the main head and shoulder pattern. So you see a shoulder, you see the head, you see the other shoulder, and the market just starts dropping. So for this one, that means that the market was actually on an uptrend, like the market was going up before. And when this pattern was formed, it started coming down. So this is actually a downtrend. So for when you see this kind of downtrend, what you do is to place sell orders. What you do is to place sell orders. So this is just how it works. So I'm going to be going over my chart, and you have to forgive me for this because kind of I do not set this beforehand. I just go to my chart and look for it, so that I love it when we look for it together. I love it when we look for it together. So although I've seen one now, I've seen a very good example. Okay, I've seen another example here. Now, for instance, this is GBP USD, that is the Great Britain pound and the US dollar. This is an hour time frame. So I think this happened on Friday, May, 9th of May. So this year, it gave my right shoulder. It's, the market was coming down. So this year gave the right shoulder. Then the market came down to this place, giving them head. And then it came up again, giving the left shoulder. Now, if you notice this thing, it didn't really align. Like the first shoulder is here, the second shoulder is a little bit upward, it's not down. It still works. It still works. It's like you can still use it. So for this kind of trade, what you will do is to place a buy order and put, ideally your stop loss is supposed to be below your head. The head pattern that was formed is supposed to be below that. So you see that when this pattern was formed, the market just started going up. Let me have to, this one is not part of it. Let me delete it. So when it was formed, okay, I've taken it out. Remove this one, remove two. So, okay, so you see that when this pattern was formed like this, the head, the shoulder, and the second, sorry, the shoulder, the head, and the last shoulder, the market just started going up. And it was actually a good buy. You see that the market really did a very good one. Market really did a very good buy until now. What you want to know in forex trading is that a trend, like we have the uptrend, downtrend, and ranging market. A trend is not continuously up, neither is a trend continuously down. If not, the market would, it's not possible. So it did a very good upward movement before it started coming down again. So imagine I placed a buy order at this particular point when the last shoulder was formed. And for days, like this took, you remember this started on the 9th of May, and even up to the 27th of May, you will still see that the market was going up. I want to do a pip count here. Let's see. Let me do a pip count. Let me measure this movement. Now, from this particular point, I want to measure this particular point to this high. Even though I exited from this side, I'll still be in good profit. So let's do that. From this point, I think I have to use my forecasting tool. This will be a long position. From here to this top point, this is like 300 pips profit. 300 pips profit is a very huge gain. 300 pips profit. So if you are using a least loss rate of 0.01, that will be $30. If you are using 0.1, that is $300. If you are using a standard loss rate, that is a open profit of $3,000. So that I said I don't want to overbug us with strategies, because we are doing intentional trading here. So you must not know all the strategies to be profitable in forex trading. You must not know all the strategy or use all the strategies to be profitable in forex trading. A simple strategy and you are good to go. Now I want to look for a reversal pattern. That is, I talked about US. I talked about head and shoulders, the inverse head and shoulders. So let me see, that one is the inverse. So let me talk about the main head and shoulders pattern, so that you will see that this one, the main head and shoulders pattern, is for you to place a sell order, while the inverse head and shoulders pattern is for you to place a buy order. Okay, so I will still go. Let me check. Okay, this one is the head, this one is shoulder, this one is an head, this one is another shoulder. Market went up. Now this pattern didn't really go up that much, but I can show you that between this point to this point, this can give around 50 pips profit, and 50 pips profit is a banger. It's not something small. Okay, I've entered December. Let me check around May if I'll see. Okay, I've seen a main head and shoulders here. So here we have, here we have the first shoulder pattern. Then we have the head. Then we have the second shoulder here, and the market started dropping. So for this normal head and shoulders pattern, you place a sell order. So let me write that out. I don't know if you can hear me clearly. So let me write head and shoulders pattern. Let me write it. So this pattern is just head and shoulders. That is what it is called. So we have the head. No, it didn't come here. Let me go back. Okay, head, normal head and shoulders. So this is the pattern we just looked at, head and shoulders pattern. So it's not something that is difficult. Now, if you want to make this your strategy, I'll just explain how to use it. If you want to make this your strategy, what you will do is that you anything I want to confirm if you can hear me. My network just went off. Sorry about that. Okay. Can you all hear me now? Can you all hear me now? I'm not. Okay. Sorry, my network just started up, so that's why I just disconnected like that. So I was talking about the inverse head and shoulder, the normal head and shoulder that indicates a sell order that should make you to place a sell order. So let me delete this so that it doesn't affect us. Can you see my screen? Can you see my screen? Can you see my screen too? Let me know. Okay, my screen isn't showing yet. It's showing on my end. So let me work on that. Sorry, let me okay. I'm setting up my screen, so it just be okay. So can you see it now? I don't know why my screen is no longer showing. Okay. Okay. I've gone to something else. Is my screen now visible? Or just the flyer? I'm trying to set. Okay. Oh, okay. I think it's not visible. All right. So please let me know if my screen is visible on your end. Let me know if my screen is visible on your own end. So I was saying that I was looking for an a normal head and shoulders pattern. So that's what I was looking for before my own network disconnected. And we are live. Thank you for your patience. So let's continue. So on a normal head and shoulders pattern, what you do is to look for. Okay, I've seen this one. I think this one happened on Thursday. So you see the shoulder. I don't like calling it right or left shoulder. So you see the shoulder, the first shoulder, you see the second shoulder and the last shoulder, and the market started coming down. So for this pattern, what you do is to place a sell order. Is as simple as that. What you do is to place a sell order. That is just how you do it. And when you place a sell order, you if I measure this, let me do a brief measurement of this. I think this should be more than 50 pips profit. Remember, we are talking about trading intentionally, so you don't go about looking for everything that the market is not showing you. That's why I said I'm going to be teaching just few, not I'm going to be teaching just few, so that if you won't work with just this few, I will teach. This is 80 pips profit. This is 80 pips in profit. So since this is 80 pips in profit, this is a very good one. This is a very good one. So imagine taking a trade for 80 pips in profit. For the least loss side, this is $8. For 0.1 lot size, this is $80. Right? For a standard lot size, this is $800, and it's a very good one. So you see that in forex trading, you don't need to compound yourself with too much information. Having too much information will make you not to be profitable. You do not need to compound yourself with too much information. Now, the next thing I'm going to be teaching, this is one pattern. This is a chart pattern, head and shoulders pattern. So I want to teach just one candlestick pattern because obviously I will not be able to finish everything today. I will not be able to finish everything today. So you can just stay with these two patterns I'm teaching you, and you still make profit in trading. So I want to use the pattern I'm going to be teaching you right now is, let me put it here. It's called the star pattern. It's called the star pattern. So this pattern is actually a candlestick pattern that has three candlesticks combined together. That are combined together. So I'm going to be drawing the first candlestick. This will be my first candle. Sorry, I'm not really good in drawing, so this will be my first candle. While the second candle will be a smallish candle, then you have your last candle. Now, for every chart pattern and candlestick pattern, there are always two forms. It's always in either the bullish pattern or the bearish pattern. That's why you see that when I talked about this, the head and shoulders pattern, I showed you that one will make you to sell, while the other one will make you to buy. So if you are selling, that means that is a bearish pattern. If you are buying, that means it's a bullish pattern. Okay, so that is that. So for this is a bullish star pattern because it's giving an information confirmation that the market is going to go up. So what you do is to place a buy order. So this is for this one. Okay. So you have a smallish candlestick at the middle. Then you have the last one. Okay, so this is a bearish star pattern. So with this bearish star pattern, what you do is to place a sell order. That is simple. With a bearish star pattern, what you do is to place a sell order. So let's go through our chart and see examples of these patterns. Now, I'm actually teaching you these patterns because it's it's very common. You can, if you are diligent with your study, because some people don't know that they have to study forex trading. They think it's something they can just get into like that. No, you must study first. So when you get into your study, you can see these patterns anywhere on your chart. You can see these patterns anywhere on your chart. So I'm going to be looking for um okay, I've seen one. Let me expand my, this is actually a bullish star pattern that I just saw. So let's go. Now you see that now there are conditions for a bullish star pattern. Tells you that the market is going to go up. So that would mean first of all that the market was in a downtrend. That would mean first of all that the market was in a downtrend. So if it is in a downtrend, that means the market was coming down. Since it's coming down, you have more red candles. That is more bearish candle. So for a bullish star pattern, the first candlestick, we have three candlestick. The first candlestick must be a bearish candle, which is this red candle that you are seeing here. The first candlestick must be a bearish candle. There are conditions that qualifies it. The second candlestick can either be a bullish candle or a bearish candle, while the third candlestick must be a bullish candlestick. And then you see that market starts going up. So when you see a bullish star pattern, that means what you should do is to place a buy. Simple. Is to place a buy order. You see that trading is actually easy if you do not complicate things for yourself. You place a buy order and market starts going up. So I want to look for another example of a bullish star pattern before we go to the bearish star pattern. The bearish star pattern. I've seen another. Okay, look at another example. Now look at our first candle, a red candle here. I believe my screen is wide enough for us to see. Let me expand it. Okay. So the first candlestick that is here is a red candle. The second one, I say it can either be a red candle or a green candle, which indicates that it can either be a bullish candle or a bearish candle. While the last one is a bullish candle. I see that when this was from, market just started going up. Market just started going up and it's a good run. It was a good run. So you place a buy order, putting your stop loss below the pattern. This is just it. So I want to look for bearish star patterns, the ones that will indicate that the market is going to go down. That's what bearish star patterns. Okay, let me sum this one in so that. Okay, I'm trying to look for good. I'm seeing some examples, but um, I want to present. I want very good examples. Now, as a trader, you want to be diligent is going back, like going to see what market has done previously. This will strengthen your knowledge on what to do at every given point in time. So you don't want to be lazy in doing research. Now, what we are doing now is kind of market research. So there's market research in forex trading. This is charts, like this is analysis. This is what we are doing. So it is, don't just be, you don't want to just be waiting for, maybe you just see one random post on Twitter or Instagram telling you to go into a trade and you don't even know where the trade is at the moment. Okay? Okay, I've seen an example. No, I don't want to use this. Let me check further. Okay, I've seen one that I could use. Now, this for the bearish star pattern that indicates that market is going to go down. So you see, there is the first candlestick pattern here. That is a bullish candlestick pattern. This is the condition. The first candlestick must be bullish. The second one can either be bearish or bullish, which is this, and you have the last one. Now you see that the market just started dropping. So when you take this sell order, you put your stop loss above the pattern and you watch it come down. You take profit when you are good enough. Like when you are okay that, oh, this profit is cool for me. So that's when you take profit. So like I said before, trading with intent does not mean that you just be running about following anything you see in the market. It means that you are calculated in your approach. So with just these two strategies that I've taught just now, you will be able to shut out noise from the market. You're able to shut out noise. Why? Because if you don't see these strategies, you just say, okay, if I do not see these strategies, that means I am not going to trade, and that is it. The market is not running. I always tell my peeps that the market is not running. So the market is not running, the market will always be here. So you will not make all the money in one day. So if you make these two strategy what you'll be seeing, your entry signals, that means anytime you do not see these, you are not trading. If these strategies do not present themselves, you are not trading. You just stay. If you do not trade, you are not losing money. You will not die. Okay. So, and this is a good approach of trading intentionally with strategies. Now, the other part of trading intentionally is risk management, which I'm going to just be brief with. Risk management is taking trades according to your account size. Risk management is taking a trade according to your account size. For instance, you are trading with $1,000. You have no business trading with 1,000 with a standard lot size. That means one lot size. You have no business trading with that. So you want to trade with 0.1, 0.05, 0.7. Anything below 0.1 is fair. Why? Because the market is not, you don't have an 100% success rate. Like every time you trade, the market is going to go that way. There's even having 70% success rate is fair, is good enough. So since it's not every time the market, there will be losses in trading. There are losses in trading. This is where risk management comes in, so that you don't lose all your money, and when you have a good opportunity, you will not be able to trade. You understand? So you want to be intentional about your risk management approach. Do not trade more than your account can carry. So let's say, I've used $1,000. Let's use $100. If you are trading with $100, do not place a trade that is more than 0.02 lot size. And your stop losses should be between 20, like below 20, 30 pips. It should not be above that. Why? Because the market will not always go your direction. is there. The market will not always go your way. So since the market will not always go your way, you need to be guarded against it, so that in case a trade hits stop loss, you have enough money to place another trade. That is how trading works. That businesses, people don't approach trading with businesses, trading with a business mindset, and it's wrong. In businesses incur losses. That is how trading also is. Okay, so all those people that will always be posting trades, posting profits, and not posting losses, they used to make losses, like they used to incur losses on that ground, like behind the scenes, but they don't show you that. But the truth is that there are losses in trading. So in order for you to avoid that, you want, and is a must, that you are intentional about your risk management approach. Do not for any reason trade without risks, like without calculating what you are willing to lose in a particular trade. So for instance, if you are trading with that $100 using 0.02 loss size, your stop loss should not be more than 20 pips, or let's say 30 pips. So you ask yourself, what if I see a star pattern and the stop loss is far, like the stop loss is like 50 pips? Don't trade this, just leave it. There will be another star pattern that will come. Okay, there'll be another star pattern that will come. So since there'll be another star pattern that will come, you do not want to risk that amount of money just because of one particular trade. Wait, when another pattern presents itself, you see it early, the stop loss is fair, you can trade it, and you will be rest assured that fine, you are not risking too much. Some persons used to have heart attack when they face a trade. Why? Because they are risking too much in a trade, and it's not good. It's not fair. So you want to be intentional about, I've talked about strategy, using few strategies. So I thought just two. If you follow the strategies for the next trading period, let's say this is June, let's say in July, the whole of July, you said, okay, I want to be trading with just head and shoulders pattern only. There's no way you will not record profits in by the end of July. It's not possible. Why? Because you are now focused. You are now focused, you now have direction, you have a clear objective, and you have a clear goal. You understand? So let's say I'm doing a 30-day action plan. So the first thing now is that you take let's say just head and shoulder pattern fair. Then you say, okay, the next thing, this is about intentional trading now. The next thing is that I'm trading just, my account size is $100, so I'm trading just 0.02 lot size. I'm not increasing it for any reason. I'm not decreasing it. So even though I see a trade like that, it's very, very like promising. Not carry your full problem inside one trade. Okay. So even though you see a trade that is very, very promising, you stick to 0.02 lot size. That's the second thing. Now the third thing is that you check the stop loss. If it is more than 20 pips, do not trade it. If it is more than 20 pips, do not trade it. Do not trade it. Just leave it. Wait for the next opportunity to present itself. So when this, then your take profit can be around 30 pips, 40 pips, just like that. When you do this in the whole of July, you come and meet me in my DM and say that you made profit. I had a student that was last year that he just traded with star pattern. Yeah, only star pattern. And when he showed me his portfolio, it was good, just star pattern. He said that if he does not see star pattern on his chart, he will not trade. And that is a very good one. So he was very, very keen and intentional in his trading approach. So this is all I'll be taking up for tonight, because I definitely will not be able to share with it. So this is all for tonight. If you have any questions, my DM is open, and those in my WhatsApp platform, I will open the group for you to see, for you to ask your questions. So in case you have any questions, I'll open the group up so that you can ask your question. So this will be all for this night. Have a lovely night rest and a lovely week ahead. I am still Sarah Bamba. Okay, bye.